Good morning, everybody, and happy Monday. Good morning. We're going to get started in just a couple minutes. As usual, it's a great day not to sleep in today. I think people are slowly but surely waking up to this being a trading year. So I'm hoping we're able to bring that message across. Haven't had one of those in a long time, very long time. So I'm excited for all the opportunity here. Let's get started here. All right. Very good. All right. Good morning, everybody, and happy Monday. This is our Set the Market morning show. Serge Berger here from the Steady Trader. If you're new here, if you're here for the first time, what we do is we take the next sort of 10 to 15 minutes and we go through things that we are looking that are sort of top of mind, looking at through the lens of the markets. And obviously this morning we have a newsy one, so let's get to it. I want to quickly start off by talking more about the sentiment stuff, and you can kind of just forget what's on the screen here for a minute. It's not important for a second. When we look at sentiment, it's still extremely complacent. Everyone is all in on U.S. equities, at least stateside, and that is, setting us up for potentially more volatility than one has bargained for. I talk to lots of people every single week, not just institutional investors, but also clients and retail investors, and the mindset is, I'm trying to be polite. It's extremely they're extremely risk friendly to take risk. And I've never seen anything to this magnitude. It's actually very difficult to talk to people with and make them think in terms of risk. Most people are almost a bit drugged by the AI trade and the Max 7s and all that stuff that's worked so well for so many years. And I'm extremely gravely concerned for most self-directed traders and investors because I don't think they know what they're in for. They really don't. And that's not because we're thinking the market's going to crash necessarily. Again, those are outlier calls. That's not the point. But I don't think they're aware of what could happen well without their comfort zone. Most people are comfortable within 10 to 15% drop of their portfolio. But when a portfolio net worth goes down 20, 30%, which is easily possible in this environment, and that would not be a crash. I don't think these people know what they're going to do and how they're going to react. They think they know how to, but they will not. So, and there's probably lots of people here on this call too that fall into that category. So I'm trying not to be mean. I'm trying to just, express my concern that I have. Now, from a trading perspective this year, we need to be open for all opportunity. And I think there's plenty of upside to be had. It may not be in the S&P 500, maybe in other things, but also I think there's a lot of potential on the downside. So we need to be open-minded, I think, is really the point. So let's have a look at a couple things. First of all, obviously this morning, the tariffs, I think everyone has already been probably following this. I'm not here to regurgitate news. That's kind of senseless. But as far as just the broader risk appetite levels, and this is, again, I keep saying, sadly, it's come down to a few stocks. I've been saying this for a long time now, but it really comes down to this. The S&P pre-market here, the SPY is trading around 592, so that's about here. I'm going to quickly annotate that. That's about here. So that's smack dab in the middle of the trading range that the S&P has been in essentially since after the election, right? If you were to extend this is more or less what happened right after the election. We gapped higher, and then this has been the trading range ever since. We failed on the upper end of the trading range. We failed for the bears. At the bottom end of the trading range, in mid-January, and we held those very, very important levels that I've been talking about. 580 is the level on the SPY. But what's happening is while the S&P is holding up, underneath the surface, the NVIDIAs of the world have broken some pretty important levels. Now, that does not mean the stock can't ever rally again. I keep saying the same thing, but it is a violation that we want to be, I at least want to be respecting. And so, I keep pointing to this 150 period moving average. I keep pointing to, the levels that we've been, or the times we've held that, and we're now trading below that for the first time since, since basically January, let's call it late 2022, right? So the machines have clearly kind of, said that we're not going to hold that level again, and here we are. So I think underneath the surface, things are actually probably quite a bit weaker than what the S&P were to tell us. So I think it's easily possible for us to have ultimately a 10% move. I don't even want to call it a correction at this point. That would be just, a blip. I think we could go down way more, but that's not the forecast. I'm saying one could go down way more. So 580 is the level. If we break 580 on a daily closing basis, right, then I think we're setting up for probably the mid 500s, 550. Maybe that would be a 10% drawdown. I could easily see 15 to 20%. Now, again, it's silly to talk about this because we don't have the signals yet in the S&P for that to happen. We need to break 580. We are, if you're an Inner Circle member, we're short the S&P 500, the SPY, and so I think we could easily get there. The question, of course, is what happens after that. And honestly, I don't know. I think there's too many questions here as it relates to how long are these tariffs for? Is it more of a bargaining thing? I don't know. And no one really knows for sure. A lot of people have a lot of opinions, especially on Twitter and other places, but no one really knows, right? The consensus, even inside the government, was that these tariffs weren't going to hit for another while, and here they are, right? So clearly no one knows, and so I'm sure a lot of people will tell you they know, they don't know, especially from a market perspective. So that's what's going on in terms of the S&P now. Why? Now, the other thing that you want to keep in mind is there's a lot of gap risk. And so you look at, for example, last Friday, this is Apple, and we talked about this Friday morning in the Trade Ops chat room that I think a lot of you guys are part of. And if you're not, reach out to our team. You want to be a part of that. You can see the S&P, Apple gapped higher, and this green area represents the gap. So Apple left on the chart a really big outside reversal day. And so, the stock gapped up something like, what was it? Ultimately about 4%. And then within an hour or so, started to work into its unfilled gap. And then by day's end, in fact, by early afternoon, started filling the entire gap. Right, so you can see how this gap got filled. The S&P 500 gave us an absolute beauty of a sell signal from the TST trender. This is a 5-minute chart from Friday afternoon at 1:15 Eastern time. You can see how the TST trender fired off a sell signal. And there's a reason. I'm not trying to regurgitate past signals. There's a reason why I'm showing you this, because I think that's exactly where the opportunity is right now. Now, this is an intraday opportunity. But remember, the S&P is just doing this, and a lot of stocks are just doing this. We're just chopping back and forth in a range. And so, the S&P ended up dropping about 1% from that sell signal. So, short, let's say one S&P futures contract would have netted like, $2 or $3 grand. So there's so much opportunity here. It really is, it's quite remarkable, yet people are still navel gazing at their NVIDIA chart, right, or their Tesla chart, when the opportunity is so much broader, so much deeper, and so much, so much better in terms of the risk metrics. So I would really encourage everyone to make sure you understand what is momentum, and there's a lot of gap risk in the market nowadays. So you look at the S&P on Friday morning, you can see it gapped higher. This is the up gap right here, that empty space, and it fully closed that gap. It's once again this morning gapping. It's gapping down. In fact, this morning the S&P is set to open around, I said 592. So I'll quickly show you this here on this chart here. So there's a lot of risk here, holding a lot of overnight positions, and you can see. So this gap here, this is a 5-minute chart of the S&P. What's happening this morning is that this gap down here is getting filled in its entirety, and that is the up gap from January 17th. So we've been filling those gaps up there. Those green areas represent gaps, up gaps that have now filled. And this morning we're set to open right around there. That's the up gap of the 17th of January. That's filling here. That's going to fill at the open. That's not, completely by accident. Those are levels that are being attracted. If that one fills and that holds, then the next level to get filled is probably the up gap from January 15th. And that would be then from this morning's open down another 1.7%. That's by no means my forecast that's going to happen today. I'm just telling you where the levels are that you want to watch. Now, that's not just day trading stuff here. That's also on the daily charts. So if you're levered long NVIDIA 9 times in ETFs and options and in your 401ks and IRAs and accounts you don't even know of, you need to be aware of this kind of stuff, right? So, because otherwise you're going to blow up your account. And a lot of people will blow up their account. I keep saying this. I know I sound angry when I say it because I am. I think a lot of people are completely irresponsible with the risk-taking willingness right now, and they're not. They're completely don't care about risk. I mean, they don't understand what the volatility will bring. This morning the VIX is trading. Sort of 20, which is nothing more than the top end of the range that we've had since, basically August. But if we go from 20 to 30 and we stay up there, people will know what to do. And it won't stay up there for very long, but maybe then it goes back to 20 and then goes to 35 or 40, right? So it's more about the volatility than a directional crash that we're calling for. That's going to cause a lot of people to basically freak out. So that's gap. The last point quickly is 2 stocks. So if you want 2 stocks, if you just say, Serge, give me a damn stock, first of all, good luck with that attitude, but here is one. So here's Visa. So Visa has been doing very well. You can see the stock since July of last year up to Friday was up about 38%. It accelerated that move. The company is up for a reason. The numbers have been good, but you can see that we had an outside reversal day on Friday. So I don't know if you want to consider this to be a raging short. I don't think that's the point, but there is, I think, likely a consolidation phase here for Visa. So, big bearish reversal candle. It's not like an outside day necessarily, but it gave up all of its gains on Friday and then some. Not too dissimilar from Apple, and of course the broader market did a lot of the same too. But I think Visa is one that you want to watch. Again, wouldn't necessarily be crazy short the stock, but I think it's settling in for a consolidation phase. And then last but not least, that's EAT. This is Brinker International. Think Chili's. They've had a hell of a year last year. They were up a couple 100%. The stock was, and it gapped up higher again last week after good numbers. People loved it, but it's now getting very, very overbought. So here too, a stock that might be something if you do options credit spreads, maybe a bear call spread. Those kinds of things are interesting here from our perspective. So that's it for me here Monday morning. Hope you guys had a great weekend. You're ready for the start this week. Please be mindful. Don't become lackadaisical and say, I'm just going to buy 5% dips. I really think that's over. A lot of people are going to learn a very, very expensive lesson this year. I'll see you guys over in the chat room in about 15 minutes. We'll see you in the Trade Ops chat room. And at the top of the hour at 10 o'clock Eastern, we're going to have a member session for ETF Silo Pro members. I've got some important updates I need to share with you there from a sector and allocation perspective as well. So thanks so much for being here. Happy Monday morning, and